What kind of properties should investors be looking at if they're going to invest at all? So what I thought I would do in this video is first of all talk about A, is it worth to try and invest today? And B, if you are, what kind of assets, what kind of locations, and what kind of opportunities should you really try to prioritize to minimize your downside and maximize your upside while we're in this state of uncertainty in the market? So with that, let's get at it. What's going on, guys? My name is Lior and I'm a multifamily investor here out of Boston, and welcome back to my channel. Now, before I get into the meat and potatoes of the video, two super quick things, guys. Number one, if this is your first time on my channel, first of all, welcome. Second of all, make sure you smash that subscribe button for me. I'm putting out weekly content here talking everything multifamily investing, everything from construction to operations to raising money to markets and literally everything in between. So if that's the kind of content you're looking for, make sure you subscribe. So with that, let's get right into the meat and potatoes. And as I said, first, let's talk about, is there still an opportunity right now to profitably invest in multifamily? And I personally think that there is, right? Obviously, you have to be very strategic and you have to be very analytical about what kind of assets and what kind of locations you're buying in today. But I actually think there's a very interesting opportunity today. And I'll give you guys an example from my market, which is Boston, right? That's where all my assets are. It's a Class A market, one of the more expensive markets in the US, but I think it will be a good example. So Boston right now is trading about 10 to 15% below market values of 2021. So, my opinion is, I think if you can go out and buy quality assets and quality locations at about 10 to 15% discounts, right, which I think is pretty significant, especially for, Class A markets, right, and you have the equity that can be patient enough to sit on the asset for at least 3, 4, 5 years, I think there's great opportunity to buy some real good discounted assets in great locations, right? Now, let's talk about this from first a downside protection and then an upside, right? So from a downside protection, right, the reason why I'm going to continue to invest in markets like Boston that are kind of stronger, more Class A type of markets is because, I think the downside on these markets is much lower, right? Class A markets and Class A and B assets, right, they tend to have lower volatility and lower cap rate decompression versus a building that's in a Class C market or it's kind of like a Class C building, right? Those buildings, just by their definition, tend to have a little bit more risk, right? That's why they tend to have generally lower pricing, higher yields, is because they come embedded with more risk. So I think to counteract any sort of downside risk today, you want to try to find the most stable as possible kind of market and asset type to avoid having any real volatility downwards. Now, in terms of the upside opportunity, it's exactly what I said, right? I know Boston and a lot of other markets now are starting to slowly come down in pricing. As I said, here we're at about 10 to 15% below 2021 values. And that's actually a very significant discount, right? You might say, you know what, well, 10 to 15%, that doesn't sound like a ton. It's not like pennies on the dollar. But, I think it's pretty, I think the general consensus is we're probably not going to see 2008 sized sorts of price compressions, right? It's going to be probably pretty unlikely. But I think 10 to 15% is really, really solid discount. So the upside is you're buying properties that are a little bit discounted, right? You have way less competition than you did, 6 to 12 months ago. And again, as long as you have that patient money that can sit with you for, at least a handful of years to ride out any near-term uncertainty, I think the upside is well worth it. Now, in terms of things I'm going to be looking for specifically in assets, there are a couple of things I want to really nail. First of all, as we kind of talked about, is I want to hit the absolute best possible locations, right? And the reason for that is obviously I think there's going to be a lot more embedded value. There's going to be a lot less risk in these kinds of assets, but also from an operational and cash flow perspective, if I can get those real high quality locations that are going to continue to be in demand, particularly for tenants, right? I should minimize my risk of, having any turmoil and vacancy, even if we experience any sort of, shifts in the rental market, right? So I think buying absolutely high quality locations where people want to live will further help you minimize any sort of downside risk. Now, the second thing that I think you really need to be on the lookout for with the building specifically is avoid any sort of physical deficiencies, right? And what I mean by physical deficiencies is stuff like, low ceiling heights, really wonky layouts, right? I'll give you an example. I actually walked an asset a few weeks ago that was in an absolutely amazing location, right? Like very close to Harvard and MIT. If you guys are not from Boston, it's a city right there. It's one of the best markets, personally, I think, in the country, really, and one of the most expensive too. But I walked this. I was really excited about it, and then I walked the building, and the ceiling heights were like really wacky. They were below 7 feet tall. The layouts were wonky, long hallways, like living rooms were super small and cramped. And what I was thinking to myself is, you know what? I think there's a lot of risk embedded in this kind of apartment inventory because, if there's any sort of shift in the rental market, this is probably going to be the least desirable type of apartment, right? So I'm incurring higher vacancy risk. I'm incurring higher risk that, I'm going to probably get lower rents, right? So I think just avoiding any sort of real physical deficiencies is actually going to be really, really crucial. So I think if you combine those two factors, hitting really good locations and kind of getting real good building product, right, that is going to be desirable, I think, again, it kind of aligns with the strategy, right? You're minimizing your downside and really opening yourself for upside, but if you're buying at the right price, at the discounted price that you can get at in today. So that's the opportunity I see in multifamily right now. Obviously, again, this could shift in 6 months depending on where the market goes, but this is where I see the opportunity, right? Go buy quality stuff at a little bit of a discount, and again, minimize your downside, open yourself up for the upside. So hopefully that helps. If you agree or disagree, make sure you put them in the comments below.